Today is the 14th of October 2025. First, I'm going to start by reviewing what I did. Then I'm going to review what was optimal. Then I'll start looking at forecasting. Okie dokie. So we got. Let's tell the story from yesterday. So yesterday we had a big gap up. Asia kind of just consolidated. London, red Asia's high, red Asia's low again. We kind of consolidated within London's range. New York, kind of hovering around that area. Did near London's high, just a bit below. So this is not what my analysis from yesterday said would happen. Let's turn all this off for now. Okay, cool. So I was expecting some kind of a run down into this new week opening gap to make the weekly wick low as for power of 3, and then a reversal. That was sort of my highest probability scenario. And then if it went below that, and there was an inversion on the weekly chart. If it went below that and it closed below this busy here, then I was going to be looking for this. And this was before Trump said, JK, we're not, don't panic. We're going to do a deal with China or whatever it was, all that bullshit. The narrative was looking bearish after this reaction. Impulsive down move. I thought maybe come down here and bounce. I was jumping the gun. Should have just waited for this to be close below. So, but I was still wrong. We didn't get a pullback. Now I'm still sort of, at least today, I'm still wary that this could come down here today. If you are a bullish bias, you would expect it to happen on Tuesday. We have got Powell speaking as well. Speech at 12:20 today. So I'll have to take a look at the news at a later date. Now I'm going to review what I did. So the first trade that I took was 15-second confirmation short inside that little civvy here. Okay, specifically, it was this short at Turtle Soup, this high, essentially using this civvy. So we came down, we ran Asia's, London's high, Asia's and London's low. We rebalanced to a 1-minute civvy, and then I was looking for some sort of a rejection and continuation down to my bias, assuming that London had put in the high of the day. Now, I was at least expecting it to make a new low here, but that didn't happen. And actually, I trailed to this high, and I was stopped out on this. And then I re-entered on this civvy when I saw an SMT and trailed break even. So I got a slight win and a break even. And then after that, I took no additional trades until the New York session. So coming into the New York session, I was watching these highs. Right here. Okay, 1 minute again. I was looking at these highs, and relative equal highs, I figured there's going to be a lot of stop losses. So this is, if we're going to go into anything and reject, and go down to my bias, my target, this would be it. And we got a good reaction, and I shorted it on a 15-second. My initial attempt was just using an order block, but I sort of realized mid-trade that that wasn't a good idea. 15-second OB, using a continuation model, so when price fails to mitigate more than to the C, then you can use a bearish order block continuation. However, there was a large BISI here. This is something I didn't really account for, which makes this lower probability and what caused it to ultimately react, and then I was forced to re-enter in a short above here. So I got stopped above this high. So really, mistake was not recognizing that this was a poor entry model for this condition because of the 15-second fair value gap. And instead, either I should have executed in this fair value gap or waited for this retracement, or I could have also used a 1-minute setup from memory as well. Yeah. So that's a nice little 2022 model with the manipulation leg. Okay, looking for using this premium SIBI up here. And you can see we get the 920 open model, a premium SIBI at 920, and then we started getting displacement down that really began accelerating after 930, all the way down, running out all of this sell side liquidity down to this low here. So let me just use some labels. Sure, working. I should use the trend line because complete this. So this was the trade that I took. I wanted it to go down here. I was out a bit before the target because I passed an evaluation, but hypothetically, say I was in, I don't know, 5 micros or something, I would have gotten out 4 at this low and tried to hold 20% for my target at the weekly open for the weekly wick low, which obviously would not have worked. I would have gotten stopped at my entry point. I don't know why there's a gap in this data here. I don't remember seeing that form in lifetime, but yeah. So we came down, we swept the sell side, reacting from the high time frame SIBI and this POI, and then we put in a nice IFVG here. I wonder if that's an SMT. Yes, it is. Take a look at yes. No, not the type of SMT I was thinking, but that's still an SMT. This low. Yeah, so we put in an SMT. That's not the SMT. No, that's somewhere. Okay. So we got the SMT. And then we got another 2022 model with a short-term high broken and a discount fair value gap retracement with an IFVG confirmation. Looking to simply target up here. You could have maybe held for London's high. However, it was a bank holiday yesterday, and even though the price action sort of started off good, and we were getting good point moves, you kind of don't expect it to have too much follow through. So you really just want to be using internal liquidity, like playing within London's range. I should be more specific. Internal liquidity where London's high and low are external. Not really trying to hold home runs until maybe the last stitch macro here. And also, I was bearish yesterday. After this happened, I thought it would keep going down like this is kind of the point. So I was not looking for this. Yeah. Oh, God, I'm still sleepy. Okay. Maybe I need more coffee. So we came back down. We failed to make a new low. Did we make an SMT? We did, kind of. One of those SMTs where ES makes equal lows and NQ makes a higher low. Technically, I mean, you can count those sometimes. I haven't really backtested that, so I can't speak on probability wise on that particular time. But so anyway, we came down and we just reversed very impulsively. So maybe, I guess the story to tell here was the optimal trade entry. Do I have it? I don't think I have that. The optimal trade entry is about 6.2 to 7.9 retracement, which is about here. I think it probably would have been below the OTE zone, but you know, it would have worked. That seems just, so this is my short, and you know, short. This is a long. Now I want to sort of mention with my short, I should not have taken it on the 15-second. I have taken many losses on the 15-second chart. I should have just waited for the 1 minute and then used my 920 model. Because it would have worked. That's full top, and I can take this long, but I did not, and I don't, you know what, I don't think I would have taken the long. I was looking for sort of a rejection of this, so maybe I would have taken it, assuming I hadn't already passed my eval, using this as an inversion fair value gap. Right? Something like this. And trailing relatively quickly. Probably at this high, trailing, going break even. So realistically, this is what I would have used as a conversion. Because I was expecting it to reject here and continue down, but it did not. So I guess the algorithmic signature was that it closed above this, it violated it, came down to a discount, you see, reacted. That's a nice little signature. And then when it got properly above it, you know, you could kind of use that as a support resistance level, this inversion fair value gap. Again, only targeting to internal liquidity. So this trade is the 1150, 1050 to 1110 macro. Jesus. So we did get an SMT here on a low time frame. I do have a model that lets me take this with the stop being down here. So let's say I was bullish today. I maybe could have taken this trade right here. Right? Because we have multiple drives of SMT and then this low is sort of held up. Where would I have exited? At most, I'm holding to this high. I doubt I would have held to this high. Maybe here. In this big city. Let's be realistic for a second. Okay, so what do I want? What do I think is going to happen today? We've got power speaking 1220. Let's get all that off the screen here. And we've got a big run up in Asia. More information than I usually have for this. Or less information, I should say, time-wise. And we've closed above this on a 15-minute. Has it been like one big candle above? No, but this is a sign of an impulsive move, so. Where is the new day opening gap? It is here. We have got, I mean, maybe it could come back down. Let's have a look at the daily. Daily is, you're kind of looking for some sort of a rejection. I want to see a rejection down into the N walk still today. To maintain my bullish bias on the week and still get this, it would need to probably happen today or by Wednesday or Wednesday in London. So that's where I'm going to cut off for this retracement to happen. Wednesday in London. I'm still looking for the same thing as yesterday. Or now. If it were to come down after Wednesday London, I'd be starting to think, hang on, this is pretty bearish. Maybe we do get my original weekly target, that big weekly this year I mentioned earlier. But until then, this is what I think will happen.